We start off with two big stories on our radar. Crypto crushing it this week with Bitcoin back above the 91,000 mark and up 35% since the election. More on that in a few minutes. But first, what else? Nvidia, the AI darling, gearing up to deliver third-quarter results next week, and Wall Street is chomping at the bit for another strong report. Analysts upping their price targets on the chip giant ahead of Wednesday's results. Wedbush seeing the stock climbing to 160, Oppenheimer's at 175, Susquehanna 180, and HSBC is all the way up at $200. That is 40% upside from today's close. But can Nvidia deliver another blowout quarter with expectations so high? Yet again, this is not the kind of action, Karen, that you love for one of your stocks going into earnings.
Well, yes, I don't like the analyst action.
Yeah.
That's what I mean. The bar, just raise the bar, raise the bar, raise the bar. I do like the, down kind of a lot.
Today.
Yes, the pullback, not just today, but the last couple of days. I think it hit 148 or 9 or something recently. And so I like that more. I think, there's this sort of tension of the promise of AI and is it working and what will demand peak, and then evidence to the contrary. And then you hear, things like, what it was, 100,000 chips today, right?
Right.
So I'm still optimistic on the story. I am long. I don't have puts right now, so I don't know. I'll look at something. They're not going to be cheap, that's for sure. But I do think, though, going into the right before it, the skew will be toward the upside. The calls will be more expensive than the puts. So I'll look at that. But I'd rather have it be down a few days.
All eyes will be on Nvidia's next financial results. Investors will get the opportunity to hear directly from the executive team driving the artificial intelligence, AI, revolution on November 20. I'm hoping that some important points will be addressed, including as how the recent developments at Supermicro will impact the company's capacity to meet demand and deliver their newest Blackwell chips on schedule. Let's examine where Nvidia might go in a year while spectators await November 20. Wall Street has extremely high expectations for Nvidia. Although Huang's public remarks undoubtedly contribute to this fire, the company's stock price, which is currently trading at around 52 times forward earnings, has continued to reflect its performance. This figure illustrates how that compares to some of the major tech companies. If Nvidia doesn't keep up its rapid growth, its stock price might begin to plateau. The business needs to perform at a very high level in order to accomplish this, which it has repeatedly demonstrated it is capable of. The introduction of Blackwell, the most recent version of its flagship AI processor, will be the largest test to come. Nvidia appears to have resolved several fabrication-related difficulties that arose earlier this summer. However, the business now needs to contend with Supermicro, a crucial link in Nvidia's supply chain. Nvidia is allegedly searching for a partner elsewhere as Supermicro faces more accusations of wrongdoing. Although Nvidia appears to be ahead of the curve, it is unclear if this will have any impact on Blackwell supplies. Silicon Valley has long been governed by Moore's Law, which states that computer processors become about twice as fast every 2 years. However, the law's durability has been questioned in recent years. This is because Moore's Law was being driven by chipmakers who were hitting the limit on how many transistors could fit in a circuit. However, it might be an outmoded paradigm. Huang, at least, thinks so. Nvidia has popularized the concept of accelerated computing, which holds that improvements in speed and efficiency are not just due to the amount of transistors in a circuit, but rather result from a variety of factors, including networking, algorithms, software, and data center architecture. According to his current theory, speed doubles or triples every year in the era of Hyper-Moore's Law. It's a bold declaration. The present AI explosion might be even greater than anticipated if it holds true. However, there is a significant if involved, and keep in mind that CEOs enjoy making audacious projections that don't usually materialize. After repurchasing $15.1 billion in Q1 and Q2, Nvidia said in August that its board had approved an additional $50 billion in stock buybacks. I'm eager to find out how much money the corporation has invested here and whether leaders plan to continue. Generally speaking, buybacks are excellent for investors. The warning here is that the market might have already factored this in since the news was made. Should the Q3 figures reveal a lackluster buyback, Nvidia's stock price may decline. I would like to reiterate that it is impossible to predict the future. With a stock like Nvidia, it's simple to get swept up in the hype. Nevertheless, with the release of Rubin, Blackwell's replacement, shortly after, all indications suggest a successful Blackwell rollout. Nvidia will, in my opinion, surpass the market and generate substantial profits once more. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
If you look at the semiconductor group overall, they've been underperforming. NVIDIA's actually been really the stalwart in that space, and I think that's interesting. I get back to what seem to be the major drivers for the stock right now. Where are we on production with Blackwell? Where are we with hyperscalers and CapEx? We've had the earnings season where they've given some guidance. That guidance was fine. We've had some other read-throughs from other folks that are part of kind of the chip infrastructure space, which hasn't been terribly good. And it gets back to where is the market and where is sentiment. That outperformance I'm talking about in the charts is notable, but I don't get the sense that the street is as keyed up into expectations on this number for some of the reasons we've been talking about. And again, we have had the company be very clear to push back on any concerns around production side of it. So they can't really tell you how aggressively they see demand, and they'll do a better job of that here. I'm sure we're not going to hear anything awful on demand, but I think it's a more balanced setup despite the run in the stock, because I just think expectations are lower.
Eventually, they have to fail on earnings. Eventually, there's got to be something, right? So you don't get to go into Vegas and keep betting on one thing and have the hand perform. Eventually, but they're still 85% of the market. Tim said it. Every other stock that you look at in the sector, the chart is horrendous. This is the... Go ahead.
No, I mean, eventually you will miss, but, I mean, is the miss a function of analysts getting too hyped up over it, and so therefore they're setting the stock up for a miss? If they didn't ratchet up their earnings expectations, they would easily jump over them. I mean, it's all a matter, right? It's the context of that.
It's a point of reference. It's where you're coming into. So Karen's completely right. You would like them to talk it down. The problem is every time they've talked it down in the past, it's leaped over them. And they've looked silly.
I'm sorry, when you're saying the analysts talk it down, or the
they don't
company,
really talk it. I'm saying it the wrong way. Whenever the analysts put out their estimates, they've definitely had a lower bar where Nvidia leaps over it, and they've looked ridiculous. Because who should know? They should know how high that bar should be in theory, and whenever Nvidia leaps over it, they look silly. So they keep raising the bar. So eventually, Nvidia has to fail.
It's difficult to find a more prolific growth stock investor than Masayoshi Sun, the CEO and biggest shareholder of SoftBank, a hugely diversified holding company with headquarters in Japan. Alibaba, Yahoo, Uber, DoorDash, WeWork, and Arm Holdings, of which SoftBank owns almost 90%, are among of Sun's most well-known investments. One of the best investments SoftBank has ever made was in Arm, a semiconductor design company that went public last year. In 2016, SoftBank paid $32 billion to take the business private. Today, that portion is valued at over $130 billion. Since its initial public offering, IPO, in September of last year, the stock has surged due to robust demand from the smartphone market and AI. Sun, who had also made an investment in Nvidia but unfortunately sold his 5% share in the chip company in 2019, currently believes that the AI industry has more potential. SoftBank was one of several investors who contributed $500 million to OpenAI's most recent fundraising round, which valued the startup at $150 billion. SoftBank was one of the investors who invested in the company that created ChatGPT. At a recent conference, Sun also made a daring statement about the direction of AI. According to Sun, who was speaking at the Future Investment Initiative, "I think Nvidia is undervalued." He continued by explaining that, according to pessimistic projections, artificial general intelligence, AGI, will only replace 5% of GDP in 10 years, or $9 trillion, based on GDP growth projections. His reasoning is that the AGI operating on that infrastructure would be able to generate $9 trillion in revenue annually at a net profit margin of 50%, which would translate into a $4.5 trillion profit, and that those chips and data centers will require $9 trillion in capital expenditures. Sun said that 200 million chips would be needed to get there, and that 400 gigawatts of electricity, more than the United States currently uses, would be needed. That may sound unrealistic, but most technological revolutions initially appear that way. The SoftBank CEO's shortcomings are as well known as his accomplishments. He lost $11.5 billion on WeWork, a significant bet he made before to the global co-working industry's explosion. He also lost $77 billion in paper wealth during the dot-com bust, which at the time was the largest loss in history. However, Sun's accomplishments have brought in far more than that. For instance, ARM made $72 billion on Alibaba after investing just $20 million, and he is up around $100 billion since SoftBank's 2015 investment. Growth stocks provide both high risk and tremendous profit, particularly those in developing technologies. But one large winner can make you rich, and one winner can erase many losers. After all, you can only lose all of your money while investing in stocks. But in rare cases, and with enough time, you can make 1,000%, 10,000%, or even more. Gains have no boundaries. Sun also emphasized the potential of artificial superintelligence, which would be 10,000 times smarter than a human and many times more powerful than AGI. Even though Nvidia is currently too huge to be a 10-bagger, at least not for a very long time, it is still worthwhile to follow his advice on AI stocks. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
It's going to be a beat and raise here. I mean, let's be clear.
It's just a matter of the degree.
It's a matter of the degree, but again, I think it's really about Blackwell ramping and Hopper actually still growing. And I don't, yeah.
Yeah. Julie, I mean, Jensen Huang has had multiple opportunities to sort of talk down Blackwell, talk down the demand, talk down the production issues, whatever, and not one opportunity was taken.
Yeah, it sounds like he's very, very confident about the outlook. I think, it's interesting to me in reading some of the research reports that we've been talking about. I read one today that was like, well, we expect them to beat by their usual $2 billion on the top line, which is an astronomical number just to beat by. I mean, as a small and mid-cap investor, I could only dream, right? But what I think is important is exactly what everyone is saying, which is this relationship between expectations and execution. And so far, they have been on the right side of that battle between those two. But when you have analysts just so regularly expecting this big beat and raise, it does create this challenge, this tightrope walk that they have to do. I think the demand is fine, and I think the production is fine. What I think is kind of an outstanding question for the long term, and this is where guidance will really come into play, is what is pricing going to look like over the longer term? We know that these hyperscalers are starting to recognize that they need to be able to create an economic model around this investment, and that's still a little bit uncertain. And so, we...
Among the most talked about topics in the computer industry are AI data centers and the power required to run them. According to a recent report by management consulting firm Gartner, data centers are expected to rise by up to 160% over the next 2 years due to the significant increases in electricity consumption caused by AI and Gen AI. By 2027, 40% of AI data centers would be operationally limited by power supply, according to Gartner. According to the company's research, data centers will need 500 terawatt-hours, TWN, of electricity annually in 2027 minus 2.6 times as much as they need in 2023 to run incremental AI-optimized servers. According to Bob Johnson, VP analyst at Gartner, The rapid expansion of new hyperscale data centers to deploy GenAI is generating an unquenchable need for electricity that will surpass utility companies' capacity expansion capabilities. Johnson claims that this might disrupt energy supply and cause shortages, which would restrict the expansion of new data centers for GenAI and other applications starting in 2026. He went on to say that because new power transmission, distribution, and generating capacity may not be available for years, short-term power shortages are likely to persist for years and won't solve the existing issues. Networking, computing, and graphics technologies are offered by Nvidia Corporation Wedbush analyst Matt Bryson maintained an outperform rating on the shares ahead of the quarterly results on November 14 and increased the price objective for the stock from $138 to $160. With the improvement from the previous quarter continuing into the fourth quarter, the advisory's FY2025 figures rise in tandem with its higher sales projection for Q3 revenues. Wedbush's confidence in investing into the next year is reflected in the rise in its FY2026 revenue and EPS prediction, as Wedbush continues to calculate its goal by applying a 36 times multiple to its FY2026 EPS. The advisory's price target rises in tandem with the expansion in its out-year forecasts. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector. Stay ahead of the game with the latest stock market news, data, and important updates. I share valuable insights and real-time information on my Telegram channel, ensuring you're always informed before everyone else. If you want to keep up with the fast-paced world of investing, open the description below, click the link to my Telegram channel, and join our growing community. Don't miss out on